Hello and welcome to Car Dealer Live. I'm James Batchelor, and today we are looking at the new and used car markets. It's going to be a retrospective of 2022, in fact, and some predictions on next year. Joining me to discuss more about this is Auto Trader's Chief Operating Officer, Catherine Faiers. Hello, Catherine.
Hi, James. Nice to be back.
Always good to have you on the show, Catherine. And it's always good to hear Auto Trader's view on these kinds of things. So, 2022, look, we're in that phase now, aren't we? We're at the end of December. We're all looking back on the year. And I do feel as though this year, this December, we are in a very different place to where we were in January. I think the market has changed quite a lot since the start of the year. I mean, what's your view? Do you think the market is in a different place to where we started the year?
I think when we're looking back in that rear view mirror, and it's definitely been a year where it's been really important to look through the headlines, to look beyond those headlines, to understand what's really happening in the automotive market. And all those headlines that you talked about have all been around unsettling and really uncertain, whether it's world events or politics or what's going to happen to the economy. With those headlines as a backdrop, it's then been easy to assume that in that period from January to now, coming up towards the end of December, that automotive market would have been similarly volatile and would have been on that journey as well. And we've been used to volatility because in 2020 and 2021, we'd seen these huge periods of lockdowns and pent-up demand, and all of our market metrics and measures were all over the place, were very, very volatile. But actually, I think from January to now, we've seen a lot of stability in the market, and in the used car market in particular, we've seen a very stable demand and supply situation, and we've seen a new car market that's been in slow but gradual recovery over the course of the year. If we look back to January specifically, the supply side was clearly very constrained, in particular a new car, and we had prices of new and used cars rising fast. Demand was tracking ahead of supply at that time, and that backdrop led to really strong margins for both manufacturers and for franchise and independents, and for most retailers in the market. We saw record-breaking results and profit performance across the board. So the year started with really good momentum, and I feel actually like we're also exiting with good momentum. And momentum's the word I use, I think, because the mood in the market's changed significantly. It's much more negative. The mood on the economy, the mood on consumer confidence, the mood on lots of other factors. And that, of course, brings with it some uncertainty when we look forward. But there's definitely still momentum today that I think will see us through into the new year. Current market performance is still being driven more by supply than it is by demand, which was the case in January. Although used car sales are still behind 2019 levels, it's being driven by lack of supply, where we are seeing where the stock's there, typically the demand is there as well. And that new car market's in slow and gradual recovery will support volumes into the new year. So we're exiting 2022 definitely with the mood music feeling different, concerns over the economy and a looming recession. But the car market was stable and healthy in 2022. And I do feel like we're exiting with good momentum from that stable and healthy market into 2023 as well.
I'll come back to the recession point in a second, but I mean, I think one thing that will change next year is that supply, isn't it? I mean, I think the general view is that supply is going to sort of get back to normal levels, generally for most car manufacturers, Q3, Q4 next year. So this time next year, we might be having a slightly different conversation, mightn't we?
Yeah, so when we look forward to new car supply levels and transaction volumes for 2023, we're hoping for a new car market of around 1.8, 1.9 million transactions, and we've been at 1.6 million for the last 1.6, 1.7 for the last few years. That 1.6, 1.7 million is below the new car numbers that we saw in the last recession. So from an automotive perspective, the new car market's been in recession for the last 2 or 3 years, and we are going to be in this slightly strange situation in 2023 where perhaps the wider economy will be in a recession, but actually we'll be seeing growth in the new car market. Now, even if the market reaches that 1.8, 1.9 million forecast for next year, that will still structurally be a much lower market than we were at prior to the pandemic. We were typically seeing north of 2 million new car transactions. So we're expecting new car supply to gradually recover over the course of next year, but we're not expecting it to reach what we would have considered to be normal market levels prior to the pandemic. So still supply constrained to some extent, the market overall.
Yeah. I mean, the general view is that we are on the edge of recession, and next year is going to be a year of being in recession. But I mean, I was talking to one of your colleagues last week, Mark Palmer, and he's of the view that Auto Trader is of the view that this recession, which we're about to go into, the trade and the industry is in a far stronger position than it was back in 2008 with the financial crash. So just because we hear the R word doesn't necessarily mean that it's going to be a bad time for those in the motor trade. It's quite a different set of circumstances we're facing now, isn't it?
Yeah, we think there's a number of reasons why it is different. Although clearly the automotive market won't be immune to the economic disruption I think we're all going to experience at some level. We believe there's a number of reasons why we think the industry will be shielded to some extent from those bigger macroeconomic factors. If we take demand side to begin with, so when it comes to consumers and consumer demand overall, we're still on our marketplace seeing what we would consider to be pretty robust, healthy levels of overall engagement, which is a pretty good proxy for demand. Used car sales are still tracking the speed of sale on Auto Trader, so how fast the average car is selling. It's still tracking well ahead of 2019 levels for now as well, which means for the average retailer, that stock holding time is still less than it was, which is a good indication that demand is keeping up with supply overall that we're seeing in the market. And whenever we look at consumers' attitudes towards buying a car, those sentiment trackers and metrics remain strong. So 8 out of 10 are still telling us they feel confident about affordability. 3/4 of consumers on Auto Trader are still telling us that they're in market to buy in the next 6 months or so. We're seeing growing worries and concerns over public transport, which means that actually those sentiment trackers towards how important is it to own a car. In the pandemic, we saw them spike because people worried about health and personal safety concerns, and now we're seeing a spike because of some of the wider transport strikes and disruption we're seeing. So more and more consumers telling us that they really need a car. And we've still obviously got these bigger structural factors from the pandemic, the hangover impact of having transaction levels that have been at recession type levels for 2 or 3 years, which means that we've still got 4 or 5 million transactions that haven't happened from the pandemic, and we've still got a really big backlog of waiting lists for people to take the test. So there's big demand side factors that are different and positive compared to the last recession. And on the supply side, absolutely, we don't have retailers sitting on big stock levels. You don't have manufacturers sitting on big stock levels. Most franchise customers still have pretty healthy order banks. So some of that supply push that would have been and was very much in the market back in 2008, 2009, around the global financial crisis, the starting position for both manufacturers and retailers is much stronger, is much healthier. They've had record profit and trading performance over the last couple of years, which gives them a good cushion, and they're not sitting on those supply and stock holding levels that we would have typically seen, which led to some of the bigger pricing corrections and adjustments that we saw, which started this spiral of a more negative market back in that last recession. So lots of factors, structural factors that feel very different, and I think means this recession will look and will feel very different in automotive.
Yeah, I think one thing that a lot of people were expecting to happen in 2022 was for used car prices to absolutely collapse and fall through the floor. that hasn't happened, as you and I both know. Do you think 2023 could finally be the year? Not finally, but it could be the year where that kind of naysayer's prediction actually comes true.
So we're not, well, I mean, we talk about this lots. We obviously always follow the data, and that's all we can do. Like what market observations, what behaviors are we seeing played back through the auto trader marketplace at the moment? And at the moment, we're still seeing a market that's characterized by supply constraints and demand and supply that is relatively imbalanced and consistent with the supply demand dynamics that we would have seen prior to the pandemic. So we've seen a pricing backdrop during 2022 that has been a gradual return to a more normal market. The year-on-year levels of growth have stabilized, have normalized over the last few months. And we've seen month-on-month movements in pricing that have been very consistent with prior to pandemic trends. So we've seen the usual seasonal decline month-on-month as we come into the Christmas period, but a very normal month-on-month period of adjustments, nothing that we would have considered any cause for concern back in 2018 or 2019. So at the moment, as we move in and look at the data that we're beginning to see through towards the end of December and begins to play forward what that might mean for the new year, we're not seeing anything on the supply side or any big influx of supply that suggests there's going to be a big correction. And equally on the demand side, we're seeing more of the same rather than any big correction there. So there's nothing in the data, and there's nothing that we're hearing from manufacturers around supply or that we're seeing in those consumer demand indicators that suggests we're set for a big correction anytime soon.
I think perhaps one of the big surprises this year, and this only happened recently, is used electric vehicle prices. I mean, they've started to stutter a little bit, haven't they? And of course, obviously, high energy prices have a factor to play in that. But do you think that's been a bit of a surprise, or do you think that was something that was likely to have happened?
And so I think the surprise has been quite the impact that's played through of the adjustments we've seen in petrol prices and energy bills. I think if we were sitting back in January 2022, we've seen the trajectory of new car production, EV production. So we were absolutely expecting that supply to gradually make its way into the used car market, and to see that tick up in used car EVs on Auto Trader that we've absolutely seen in the last few months. Unfortunately, that growth in supply has come at the moment where petrol prices and electricity prices have moved in kind of opposite direction. So when petrol prices were ticking up to nearly £2 a litre back in the spring, electric was about a quarter of the interest, new car interest that we saw on Auto Trader. Since those fuel prices have dropped back a bit and we've got more used to that market, the interest has dropped to around 15% on Auto Trader, the new car market. At the same time, household bills have been increasing, electricity bills have been getting bigger, and that has had an impact on EV demand on Auto Trader. Now, we still see, when you look at the running costs of an EV, we do still see significant benefits there. We still see over £100, I think it's about £124 over every 1,000 or so miles a month that the average consumer drives. And we see the convenience factors of being able to charge at home and not having to visit a petrol station, particularly in this sort of weather, all being benefits. But we've had a bit of a perfect storm for EV supply and demand over the last few months. And I don't think we did predict that back in January, no. And it is one of the big things that we're certainly very focused on, and where the industry, I think, needs to come together to work through how we build and create a healthy used car market for electric vehicles, because it's going to be so important to the new car market for electric vehicles that used car market is robust and is healthy.
Yeah. And also, if there are car dealers watching this who have so far had their blinkers on and not considered having electric cars as part of their stock, I mean, they're going to be left behind in the future, aren't they? So that's something they all need to consider. But moving on, I just want to hear a little bit more from what you guys are doing next year. What are your plans to help retailers with all of these potential challenges dealers are going to be facing next year? I mean, what can your partners expect in 2023?
So we're committed to investing. I think one of the most important things we can do for our partners is firstly to be completely transparent with our plans, consistent with how we work with them, and then very much continue to invest through the cycle. We always look to grow our marketing budget each year, and we'll spend more money on marketing, again next year than we have ever before, up at probably over £20 million. We're always on when it comes to marketing across our performance channels, but most importantly across social, across content, across our app, across all of those channels. And it feels more important than ever that we're out there, that as a brand we are leading the charge for the industry, looking to encourage and trigger consumers into that car buying journey and supporting retailers with their business and their lead and transaction generation. We're also committed to continuing to recruit, to grow our technology and our product and our talent pool. And we're always looking for more engineers, more designers, more product people, more marketing people, so that we can keep delivering those new products, the data tools, the insights for retailers that will really help them to navigate this market. One of the big focuses that we've talked about a lot over the last year or so has been that technology and data strategy, and us looking to partner more with retailers to help solve some of the bigger problems out there in the industry, whether it's getting that single and central view of stock across systems that we've done through Auto Trader Connect, or whether it's the big focus we've got at the moment that's helping to get our valuations data and that pricing data out and surfaced more clearly, more visibly through our retailer portal platform, but also through all of those Auto Trader Connect partners. One of the best and most empowering things I think we can do for retailers into the new year is to give them that live real-time pricing data, make it really accessible in all of the tools and all the systems that they're using, so that they can really follow that live market data. And then of course we continue to improving our core advertising products. We never stand still when it comes to that core consumer experience, and we're investing very much behind our digital retailing journey as well, so helping all retailers get the benefits from being able to do more of the journey online with consumers, and help deliver even more qualified buyers into retailers to reduce the effort and the work that they have to put into managing all of those leads that they currently get today. So lots that we're doing. I don't think it's ever felt busier in the world of Auto Trader, and lots that I'm really excited about us doing and delivering and supporting when it comes to our retailers and partners next year.
Yeah, it sounds great. It sounds like you've got a busy year ahead of you, that's for sure. But I know we've touched upon a little bit on this during this chat, but I can't not end by asking you for your crystal ball predictions here. So if you could sort of like neatly round everything up. I mean, what are your predictions for next year? I mean, both in the new and the used car market, and what kind of things do you think we're going to be talking about this time next year?
So I think in terms of market trends, I think we'll continue to see a market that's supply constrained. And I think one of the big battlegrounds, particularly for younger vehicles, will be getting access to that supply and the best supply of vehicles, because that new car, or that lack of new car transactions, is now flowing through into used. And the competition for younger used vehicles will be stronger than it's ever been. Electrification and performance of the used car EV market is going to be a big area of focus. Retailers are beginning to embrace electric vehicles. We need to help build consumer confidence so that demand remains robust and strong for those EVs that are coming through. I think we'll continue to see finance play a big and really important role. Unlike the last recession, which was a financial crisis as much as a wider consumer and confidence crisis, I think the role that finance is playing at the moment, and that growth in finance penetration that we've seen, is only going to become more important as we move into 2023. So I imagine we'll spend a lot of next year trying to improve and talk about and help retailers with their finance performance as well. And overall, I hope when it comes to the transaction levels that we expect to see, you asked specifically about new and used car transactions. I hope we'll see a new car market in growth. So back to that 1.8, 1.9 million transaction levels. And again, on used car, how that flows through, I expect we'll see a used car market next year, similar to the one we've seen this year. So around the 7 million mark. If 2023 looked like 2022, then actually the big characteristics of 2022 have been a healthy, a pretty stable and a robust market for retailers. And I hope very much that's what we'll see through to 2023 as well.
Fantastic. Well, I can't wait to catch up with you early next year. But for today, some really interesting insights there, Catherine. So thank you for joining us.
Thanks very much, James.
Well, that's it for today's Car Dealer Live. Join us again very soon. Bye-bye.